The amount of people in today's society who don't have an emergency fund is mind blowing. This is the facts, statistics right here. People who don't have an emergency savings, and that shocks me. It's crazy how 27% of Americans can only cover six months, while 46% of Americans can only cover 3 months. If you have 3 months living expenses saved up, it's basically fully funded. So what I take from that is, but also depending on how many months you need, really depends on if you're single, with independence, if you rent your home or if you buy your home, and if you have independent, how big are your, depending if you have a stable job or stable career, and if you have high cost of living cost or low cost of living cost. Someone with low cost of living, single with no dependents and low and things of that nature probably need like 3 months living expenses versus someone who has dependents, who has a home and who has a home and who have people who depend on him and is the single income provider for a whole bunch of people who are depending on them. You probably need closer to 6 months. But the amount of people who have zero savings in this country is mind blowing. So many people carry more debt than emergency savings. So your debt is basically canceling out your emergency savings because you have $1,000 in emergency savings, but you have $3,000 in credit card debt. You're not moving forward, you're going backwards because on average, credit card APR is like, we're just assuming that's it's credit card debt. It's somewhere around 20 to 25%, and your emergency savings is only paying you like 3 to 4% on average each month. So in that stance, you're losing somewhere between 20 and 22% of your money each month because you're going backwards. When you have debt, but you have savings, you're basically going backwards. It's going to cancel itself out because the credit card debt is going to grow faster than your savings. That's so crazy to me. I mean, I'm just so glad to not have any debt. So glad to have a fully funded emergency fund. Not only that, but I'm able to invest consistently. When you guys don't have debt and when you guys have an emergency savings, you guys are pretty much able to supercharge your savings. You guys are able to take vacations. Like, guys, I'm going on, like, before this year is over, I'm taking 2 trips. I'm taking a day vacation and I'm taking another vacation for my birthday in a couple months. Gotta go to a hotel and just lay low and just relax. But I could do that because I have a fully funded emergency fund and I live below my means. And I'm allowed to fund those things now that I don't have all this money going out to different things. You guys realize when you guys don't have any debt, after your utilities is paid for, your money is yours. And that's just your basic living expenses like food, rent, mortgage, transportation, water, electricity, stuff like that. And after that, and some of that stuff can be cheap even, depending on if you're single and where you live and things of that nature. Like for me, that stuff is usually pretty cheap. So after that, my money is mine and I can do what I want with it. But it feels so good to know that you don't owe anybody a dime. It just feels so good. But not having no emergency savings is equivalent to swimming without no life jacket. When that unexpected expense hits, that car repair, that medical bill, or anything breaks down, or job loss, how you're going to be able to support yourself, how you're going to be able to pay that unexpected bill. The emergency fund, it protects your financial foundation. Emergency fund is the financial foundation. And what is an emergency fund? Some people might ask, because some people might even know that. An emergency fund is basically 3 to 6 months of your living expenses saved up. And where should you keep it? You should keep it in a high yield savings account. guys, because traditional savings accounts, they're only paying about 0.1%. And when you keeping your money in the bank, you at least want it to make some money. At least if it could keep up with inflation, or even maybe grow above inflation, because inflation is right around that 3% mark, that 3.1 to 3.2% mark as of right now. And savings in this country and high yield savings accounts are currently paying around 3% to 3.5%. So you at least keeping up with inflation, or your savings account in some cases, depending who you keep it with, is going to be growing above inflation in some cases. People might ask, why not just keep it within an investment account? You don't really want to do that, because your investment could go up and down. Because the stock market, investments could go up and down, and that's not usually. You need emergency savings. Is another word for liquid savings, just in case something happens to you. Basically, just having cash that you can access within 1 to 2 business days, just in case something happens. You don't have to take no penalty. You don't got to take anything. And don't keep your money. You don't keep your money in a CD. A CD is basically a certificate of deposit, where basically you deposit your money, and it locks your money for a certain amount of time until it matures. It pays the same as a high yield savings account, but I don't even use CDs because, well, I guess you could if you're trying to save up for something and just trying to have it just earn some interest, but just keep your high yield savings account. Just keep your emergency fund, I'm sorry, I'm talking too fast, in a high yield savings account, because that's where I keep mine at. And I'm able to sleep better at night. When you have financial peace, you're able to sleep better at night. We have an emergency saving. That's the first step to financial peace, right there. Having a fully funded emergency fund, and that's an accomplishment within itself. I'm so glad I got a fully funded emergency fund. If something happens to me, I'm gonna be good. I'm not gonna have to go into credit card debt. I'm not gonna have to take out no loan. I'm not gonna have to go into no buy now pay later loan. I'm not gonna have to ask nobody for help. Because it also feels good when you don't have to ask nobody for help financially, because you're doing it yourself. You're making it happen yourself. Part of having an emergency fund is being financially literate and making financial sound decisions. To me, financial literacy also means being able to make financial sound decisions while knowing what to do. You see, if you don't know what to do, you see, there's no excuse for no adult to not be financially literate, because managing money, that's one of the most important skills that you have to have. Managing money is a skill. Money is a skill. Making more money is a skill, something that you gotta learn. I learned it. I learned the game. I learned about investing. I learned that at a young age. I must be 20 in a couple months. I learned that at a young age. I seek the knowledge at a young age. Before I did it, I learned the knowledge. I learned about credit. I learned about budgeting. I learned about spending. I learned about the different types of debt payoff methods, the avalanche and the snowball method. I learned about those things. Not that I would ever use it, because I'm not going to get into debt, because I just pay cash for everything. And when you have an emergency savings, you're less likely to go into debt, because people who get into credit card debt, it's usually not because that they were irresponsible, but it's because when that expense came that they didn't have enough money to cover for, like that $2,000 car repair, they went to put that on a credit card, charging about 20% interest, and they keep making the minimum payment on it, and they look up 5 years later, they're still making the minimum payment on it, and they in $10,000 in credit card debt. They over their head in credit card debt, and as a result of that, they're stressed out. But that all comes from them not having an emergency savings, not having any liquid savings, not having any source of funds to tap into when life got rough. Because I'm going to continue to talk about building assets, building that emergency fund, and then investing your money. I just opened up a textbook brokerage account. That's gonna be extra money, you know, nothing for retirement and nothing for savings, just for extra money. Because each time now that my income is starting to go up and I know how much to put into my Roth IRA, my savings, and my 401k and my current job. After all my expenses paid for, I still have a surplus of cash. So why not have that make even more money for me? Why not have that make even more dividends for me in the long run? Guys, it's all about putting your money to work. Either we have an emergency savings, you're putting your money to work because you're at least earning some money, not to a rate of return on the stock market, but you're still earning some money. So guys, save that money because it is important. Invest it, save it. That's all you can do. Just build that emergency fund. Your financial future, your financial life will feel so much better, and you will be able to sleep at night. Promise.